today we're just going to do an inflation Fed special. Normally I give you 3 or 4 ideas to talk about. Here's the only thing that anyone on the street is talking about today. That's the Fed meeting, and that's what's the Fed going to do about inflation. To give you a recap, the Fed is purchasing $120 billion of U.S. Treasuries each and every month. That keeps interest rates relatively low. Currently, the 10-year is trading at just under 1.5%. What does this mean on a go-forward basis? Well, the Fed risks, if they don't taper off fast enough, overheating the economy and stimulating too much inflation on a go-forward basis. The Fed has previously committed to not even thinking about tapering, not even thinking about reducing their asset purchases until 2022 or 2023. We're seeing data on a go-forward basis that shows inflation is running a little bit higher than what the Fed would normally like to see. 2% is their sort of quasi goal. We're now seeing 3% yearly. There's some base effects in there. We're also seeing inflation around the world. Let me show you some key numbers. You've got UK inflation, which tends to be a little bit lower than US inflation, now at 2.1%. This data was released this morning. We've got Brazil raising its rates 75 basis points, up to 4.25% expected today. Of course, their inflation is running at about 8%, right? So we're seeing inflation all around the world, and certainly we've seen it taper off in commodities. Of course, if you are a regular watcher of the job, you know that what I watch is logistics. I watch supply chains. The only thing that fewer folks wake up and think about in the morning than stocks and bonds, my business, even the only thing that people wake up and think about less than that is folks that think about logistics, right? The science and technology of how things get around the world is just not that interesting to most folks. In this case, it's a key. It's how we think about prices increasing. It's the cost of transportation. We talked about shipping rates before. Cost of transportation increases as the cost of raw materials increase, as the cost of labor increases. Those are the prices that end up being embedded into inflation. On a go-forward basis, what are the Fed's options? What are the risks? What do they have in their toolkit? Well, they can let inflation run a little bit, keep rates low. That's stimulative of the economy. They do risk letting that run too much and inflation being relevant. I don't think there's a great risk of that. There are many deflationary elements of the economy that are sort of long-term trends. Automation is very deflationary. You don't have to pay people. You don't have to pay increasing wages. You just buy a robot once and let it run. Other side of the coin, if you taper off too fast, if you say, hey, we're going to start thinking about reducing our purchases perhaps in Q3 or Q4, then you risk spooking investors and having 10-year rates go too high, cost of government borrowing goes too high, and stall this sort of economic recovery. Of course, we've said the U.S. is a world leader in terms of producing assets, having good governance, and leading the world out of the COVID depression. You have to remember, COVID is still a big thing in the developing world. It's not a big thing in the developed world anymore, quite frankly, because we have enough vaccine to go around. Anybody that can get a vaccine wants one. New York at 70% vaccination rate, showing why that's really important. COVID cases are down to virtually next to nothing on a go-forward basis. For the developing world, Asia, some of these economic powerhouses, India, China, still have some room to go, still have some weeks and months where we need to export some vaccines, get those folks vaccinated, get the global economy back on track. What do I think? I think the Fed is going to maintain their policy on a go-forward basis. They're going to continue to have those $120 billion asset purchases and think that, hey, the risk of inflation running away isn't quite as big as the risk of stalling the economy, because you do have some deflationary structural factors long-term that are working to counteract that narrative. That's my take. If you have a different take, feel free to post it here in the comments below. We do love reading it on a go-forward basis. If you want some additional information throughout the day, feel free to follow me on Twitter. It's OKCCFACFP. Until then, I'm out.